Yeah, this is actually a pretty low-key yet exciting presentation that I'm doing tonight. So I've got everything set up here. And, okay, perfect. Here in Connecticut, awesome. So the nice thing about this is sometimes I've done some of these bigger kind of classes like this, and we have a lot of people that come in like from other sites. And so I have to kind of do a little, what I would just call, for lack of a better term, over-explaining. But this is just for us. This is just for you guys in our internal kind of group here. So I can just kind of dive right into that, which is the way I like to do it. So it's going to be a lot of free-form talking and stuff like that too, but I just want to show you some cool tools and really just kind of talk about like some goals that I've had for a while in terms of pinning stuff down and trading and stuff like that too. And we'll just kind of, that's funny, Don. And so, we'll just kind of dive in on that. So what I want to talk about tonight is weekly wires, my 120% per year option income blueprint. And the reason is that, at the beginning of the year, when I started this, like Martin Luther King, I had a dream, and I wanted to try something that I hadn't really tried before, and to see how it was going to work out. And it's working out, a lot. I mean, it's hard to, it's working out pretty darn good. So, and I've talked about this before. I mean, the goal of trading at the end of the day, and this is not a, not a new term by any stretch, but the main goal of trading, it's not to be right, okay, not to be right, and it's, not to catch every move, all right, and it's not to, show everybody like how smart you are, okay. None of that really matters, and all that honestly gets in the way of really trading. The only thing that matters is that you have an equity curve that goes from the lower left of your screen to the upper right, because guess what? Your equity curve reflects you and your plan as a trader, okay? And if your equity curve is going from the lower left to the upper right, that tells you everything you need to know about your psychological state as a trader and your plan as a trader, okay? And that's the only way you can grade it, okay? And it's the most powerful thing that you can utilize. And if you're trading and you're not tracking your weekly equity, you're missing out on a lot of insights. And once you start tracking it, you start trading differently, okay? You start trading in such a way as to make this happen, okay? As a way to kind of accentuate this as opposed to kind of unconsciously destroy it. And anyway, it gets a little exciting. So let's dive into this. So the question comes up, and the reason we're talking about weekly income, and if you guys have been watching me trading this year, I mean, it's like, yeah, look, some trades we're doing are working out really well. Obviously, some are getting stopped out. But my account's growing, and I'm able to wire money out, which is kind of like, from a trading perspective, the way I look at it is like, hey, that's the best of both worlds. Because if you're able to wire, say, a fixed percentage out every week, okay, and your account continues to grow, like, say, month by month, then two great things happen. One, well, the main thing is that the amount of money you get to wire out every week goes up. Okay, so it's like the best of both worlds. It's like if you put in an investment. Okay, say that your neighbor is starting a company, and you want to put in $100,000, and as the company grows, you get distributions every quarter. Plus, the company gets more valuable. For your original $100,000 turns into $200,000 and turns into $300,000, and then every month you're getting a check for like 10 grand. It's like the best investment on the planet. And while doing that with a company, like investing in a company, can be hard. Like, okay, is this company going to work or not? If you adapt the right skills in trading and just learn one or two key things, you can actually just do that with your own cash. Or if you learn the skill, you can do it with other people's cash. So, but the key is to start off with a baseline, and that baseline is this: you want to start off with, your goal is to, at a minimum, generate a return on equity every week of 2.5%. This turns out to be about 120% per year, give or take. But it sets you up with the right frame of mind to at least do that, but it also opens up the possibility of more, okay? Now, for some people, that's going to seem really aggressive, especially if you're used to mutual funds, 20% per year. But remember, the number 20% per year is drilled into you from brokers and from mutual fund managers because they want you to think that that's a decent return. because then they get to charge you a lot of fees for giving you a crappy return, like 20% a year. Like, who cares? And I mean that, facetiously, because, if that's what your goal is, that's great, but you can do that on your own very easily without having to hand over a bunch of fees to a money manager. But the reality of it is, as individual traders, as retail traders with smaller accounts, okay, and by a small account, a couple $1,000,000 or less to me is a small account. So $10,000 is a small account, right? A $1 billion hedge fund is a big account. A $1 billion hedge fund cannot do what we can do in the markets because of liquidity. So because of the liquidity, because we can get in and out of almost any position we want with the click of a button, we are able to generate outsized returns, okay? So if 2.5% a week seems boring because you're thinking, hey, I got a 10K account, I want to turn this into 100K, 2.5% a week is not what I'm looking for. Well, consider like what I would just call, for lack of a better term, the magic of compounding, okay? So if you have a $10,000 account and you can make 2.5% a week, at the end of year one, you're going to have $22,000. At the end of year two, $48,000. At the end of year three, $106,000. At the end of year four, $234,000. At the end of year five, $515,000. At the end of year six, $1.1 million. Okay, and I thought, okay, that's great, but what I wanted to do is compress this time. So why do we have to wait 6 years for that to happen? Can we compress this into maybe a couple of years, okay? And can we also wire money out while we're doing this? So in a perfect world, you can get something like this where your account grows, but then, every week and every month, you're wiring out like money to live on and to do stuff and things like that. So anyway, that's from a trading perspective, that's kind of my dream, my goal. So while doing this over the course of 6 years, that's great and all, and that's fantastic, and that looks good. What I really want to do is I really wanted to kind of put this to the test, and I really wanted to give this a shot. And so, instead of trying to do like that over 6 years, what would it look like and what would it take to make that happen in less time? Okay, and so my goal ultimately is income and wealth creation. So how best to set that up, and is it even possible? Now, I want to emphasize I've tried this before and failed miserably, and I'm going to talk more about that in a minute. But it was because ultimately that I found out I just didn't have the right tools. Okay, I didn't have a couple of key tools that I needed, and I'll talk about what those are here shortly. So my goal this year, and I started off the way my account kicked off at the beginning of January, was $117,000. Okay, so my goal was, all right, let's see if I can get this to $400,000. And I didn't know how long that would take. Would that, take to December? I have no idea. But once we get there, then every week do 2.5%, and let's just see if we could compress this learning curve. Okay, and so that was the goal at the beginning of the year. So where am I? So this is a screenshot I took, I think this was yesterday. So I started off at $117,000. You can see here that the balance is $772,000. We've got a P&L of $769,000. You can see it's real time. Now this is a screenshot, and I get it. Screenshots can be manipulated. So here's my real account. You can see it's slightly different because, well, it's since it's live. So it's connected. There's a clock that's moving right there. See, and it's real-time data. There's my account number. So here, what was my balance there? So 772. So since then, it's increased by $6,000. So $778,000. P&L year to date, $777,000. And you can see today that, look, not every trade worked. Tau kicked my teeth in. Okay, I lost $9,000 on that. Yet today I was still able to book $14,000. Okay, so you're not going to win on every trade, but the idea again is that your equity curve is a reflection of all your trades. Okay, so that's the idea there. So okay, so let me. Oh, I was trying to move that out. And so here's here's a couple of snapshots of my statements. Again, so here's it's TD Ameritrade. That's our office address. Account number, and at the end of, what is this for, March. So at the beginning of March, it was at $195,000, end of March, $278,000. And then This was May at the end of beginning of May. It was $415,000. End of May, 655. Now that was a really big month, but why? Because there's a huge daily squeeze on the Nasdaq. So when you get a daily squeeze on the Nasdaq, you press it. So okay. So anyway, so the point of all this is first is to show you proof. Like, hey, look, this thing that I've been playing around with is actually working out pretty good. So once I got to $400,000, which happened on April 28th. Okay, so I went from 117 to like 400K, close or pretty close anyway. So at that point, I started doing the weekly wire. So at the end of the week, which ended on April 28th, my balance was $411,000. 2.5% of 411 is 10,281. Okay, and then my total that week was 13,000. So I made 3.43% that week. I wired out 2.5%. Okay, so I got to start off the next week with a slightly bigger balance. Now that was an amazing week. If you guys remember that week, we caught Tesla, we caught Chipotle's, and we made 37% that week. That obviously doesn't happen. And remember, my main goal is just to make 2.5%, but that doesn't mean I'm limited to that, okay? So I wired out $13,000, made a lot, kept that in, and now I'm starting the week with 537. This week we made $107,000. Great. So again, this is during this weekly squeeze, so we maximized it. So wired that out. Now the next week, if you guys remember this, I was doing good, and then we had Wednesday, and I was in Las Vegas, and the markets crashed, and I got rid of everything, and so I lost 3% that week. So even though the markets like nosedived, I only lost 3%, but I still, and I want to emphasize this, I still wired that 2.5%. So the amount I wired dipped, okay? So then we went from 593 to 663, wired out that, and then last week went from 647 to 752, wired out that. So the beginning of this week, I started at 733, and right now I'm at, what, 778. So I'm up about 50K for the week, and we'll see. Tomorrow, maybe the markets implode. We'll see. I don't know yet. So anyway, I just want to let you guys know that that's how it looks. So I started with 117K. I'm currently at, as of right here, $733,000. I've wired out $90,000, so essentially my total is 824. So my goal, of course, is I want to get to $1 million, and I don't want to blow it, in the meantime. So do you guys have any questions on that? I just want to, that's just kind of my formula that I've been using and stuff like that too. I would say, good question. Well, first, is it foolish to post your account number? So I called the broker and said, what happens if, all these people get my account number and they start calling and trying to pretend they're me? And they said, well, the only way money is going to leave your account is the only way it can leave is if it's wired back out to its originating account. So that's the only way money can leave my account. So even if people call and say, this is my account number and I've got a new account, it doesn't matter. It can only go to that. So there is security in place and things like that too. So, I just saw another question. What was it? Is this still going to work when the Trump bump ends? Yeah, so great question. So what's interesting is that the markets this year have been kind of flat. If you look at the indexes, I honestly prefer bear markets. Like I prefer down markets. So up markets are, usually kind of but from a trading perspective, I'm waiting for the market to roll over and die. It's like, come on. So that would be great. Let's see, what does it mean to wire out? Where are you putting it? Okay, so good question. I'll show you. So right here. So here's my Bank of America account. So I wire it into my personal account. So you can see here that here is my first wire for 10,281. This is coming from TD Ameritrade into my personal account here, here, here. Now, when I do this, my plan is at least 50% of this has to go into a tangible asset. Okay, so what's a tangible asset? Land, gold, art, etc. And then at least a minimum. The other 50% is generally for what I would call experiences. Okay, so what's an experience? Vacation, things like that. So that's how I kind of split it up. And of course, there's some of this too where, maybe it's like 25% experience and 25% send it in for taxes. But I wait till the end of the year for that. So, okay, so I see a lot of questions. So let me keep going because when I I answer some of these questions as we go. Okay. So I've tried this before in the past and I failed actually pretty bad. And some of you may be familiar with the story, but I'll do it pretty quick. But this was like back in like 1996. And at the time, in 1996, I was working full time. Okay. So I was trading, but I was also working full time. And at the time, I had been transferred to Minnesota. Okay, and I got a ground floor apartment, sight unseen, and my now wife, then fiance, came with me. Okay, and we moved to Minnesota in January. She had never seen snow before, and this is pretty much what it looked like. I mean, it was like 20 below zero. There were signs, from Target advertising fleece underwear on sale. I mean, we were like, oh my God, what do we give ourselves into? Our cars died. Now, up to this time, I had 2 times I had taken a 10K account and run it up to 100K. Okay, well, actually, it was a 10K account, and I'd run it up to about 120K. And then what I would do is I'd take about 20K, and I would put it into real estate. Okay, and then what I would do is say, like, all right, I got 100K, and now I'm going to try to do what? I'm going to try to turn it into $1 million. So the first time I tried that, after 6 weeks, it didn't work. I went back to 10K. All right, and then about a year later, I did it again. Got to about 130K that time. I took out 30K, put it in real estate, tried to go to $1 million, and I went bust again. The third time this happened, I started getting careful, and what I did the third time is I got it up to about 150K, and at that point, I started doing weekly income. And I started grinding out weekly income, and I was like, wow, this is really great, because psychologically, when I'm taking money out of my account, and I used to always request a check, it made it seem more real. Okay, so psychologically, I'm a huge fan of wiring money out. Okay, again, you can have the broker cut you a check, but now I just have them wire it out. But what happened in Minnesota is that after we were there, my wife, then fiance, was kind of like, look, I love you and all, but this ground floor apartment sucks. I hate the snow. Our cars don't work, and I'm trapped in my apartment all day going crazy. I was like, okay, no red flags there, but we'll work with this. And she just said, look, we need to get a house. We need a heated garage so my car will work and blah, blah, blah. I was like, okay. So we found a house. It was $30,000. I needed a $30,000 down payment. So, and at the time, my whole goal with this whole weekly income thing was I was feeling very confident that I was going to be able to quit my job. And so then the house thing came up. I had 150K. I'd been wiring out like, 3K, 4K a week. Okay, I was trading pretty conservatively once I got here. But what I was doing, I was putting it all into rare coins. Okay, so I did have, some rare coins that I'd been buying, but they weren't liquid. Like, I couldn't go sell them really quickly. It was like a 10-year investment and then go, the bid-ask spread on rare coins is horrible. So I didn't want to sell them to get the down payment for the house. So I thought, it's like, well, I don't want to take it out of my trading account, because if I have to take it out of my trading account, then I'm going to be at 120K, and I knew psychologically that might mess me up. So I was like, oh, now I got to get back to 150. So I got this great idea, and I said, you know what? I'm just going to focus on the charts, and I'm just going to put on one really big trade. And with that trade, I'm going to make 30K. All right, so that would drive my account up to 180K. I take out the 30K for the down payment of the house. I've got the 150K left, and then after we get the house, I could quit my job and just trade. So I'm like, I'm super excited. So, I was looking at the charts, and what I saw at the time was the OEX. I traded OEX options quite frequently then. And there was this big downtrend in the markets, like downtrend, 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 and we were coming back up to that level. I thought, oh, awesome, I'm going to buy a bunch of puts here. And if I buy a bunch, the OEX only had to drop like $4. That's like the S&Ps dropping $4, 4 points. And I would make 30 grand. I was super excited. And so I put the trade on. I started off with, again, 150K. I bought I think it was like 70 contracts at 7. So I put nearly, half the account in the trade. And then I was able to get some more, and I added to it, and I think I bought another 70 at like 750. Anyway, I put like my whole account in this trade. And when the markets closed, I was up $15,000. So I was super excited. All that had to happen the next day was the markets drop a little bit, and I'm money. Well, so the next morning I wake up, and the Dow was up 150 points. And I didn't really quite know what to make of it. And needless to say, and if you look at the charts on this, I should grab it, but the market gapped up, it traded sideways, rallied into the close. The next day, gapped up, traded sideways, rallied into the close. Next day, gapped up, traded sideways, rallied into the cover. It was one of the biggest rallies I've ever seen, and I turned into a deer in the headlights. And finally, I realized in this soaking, I mean, I was sick. I actually don't really remember this period. But I remember I needed money for the house. I was like, God. So I called my broker. I'm like, liquidate all my options. So my $150,000 account was now about $10,000. So I lost all my money. It was heartbreaking. I mean, I threw up. So, you know, I did what any man in his right mind would do at that time, and I sure as hell did not tell my fiance what happened. So I went to the bank. I maxed out all my credit cards. You know, I transferred money, and I got $30,000. So, and the next day at closing, we're sitting there and everything's going fine, and they're asking, well, where did the funds come from? And they needed to see that the wire was from the investment account. And of course, what I did is I maxed out all my credit cards, right? So that was not what they wanted. You know, they did not want to hear that, but I just didn't say anything, and finally they just let me sign it, and it was just a big ordeal. So after that, I threw up. And I went through a process where, I mean, it was just horrible. I don't know if you guys have ever had that bad of a trade, but it was just a horrible, horrible, horrible experience. But so at that point, I took 6 months off from trading. Obviously, I had to still keep working, but I came across Mark Douglas's work, the Disciplined Trader at the time. And that changed my life. I mean, that was great. And then I started working with mentors, and I'd sit with them for like a week, and I'd watch what they were doing. And this started building the foundation that I've built on, you know, from there. And I could see different trading styles and different things and stuff like that too. And so obviously, when I am doing this now, you know, and I've seen a lot of questions, what's your risk, what's your risk, what's your risk? So now I've gone from 117K, right, up to, you know, 778K, and I haven't had these big swings, right? So obviously I am not making huge bets here, okay? I'm making aggressive bets, but I'm not making huge bets, and I think that's important to realize, and we'll talk about that. Yeah, that was certainly a character builder. So let's talk about this. So I'm going to talk about weekly income, and so what we're going to talk about tonight is essentially learning a high probability account growth technique that you can use right away on both large and smaller starter accounts. So if you've only got 10K, that's fine, okay? Fully understand how the markets really work, including, and this is really a key part of this for those of you that understand options, including when to ignore the expected move and look at the actual statistics, okay? And we're going to talk more about that. The traits that income trades and account growth trades have in common, and then understanding and taking advantage of biweekly options. Okay, notice that's not weekly options, but biweekly options, which I found to be the best hidden method of income generation and occasional low-risk home run trades. So why consistency and not home run? And as you guys know, I like to look for kind of bigger trades, but when I see, so this time if I see like a big trade that I like, you know, like that OEX trade, I don't put my whole account into the trade, right? If I see something I really, really like, then like if I have 100K, then I would put like 10K into that trade, and that's it, okay? And I don't like to have more than 3 to 5 positions. So that means that, you know, at any given time, if I'm kind of maxed out here, if I have a 100K account, then I might have, say, you know, 40K tied up into trades, but I have 60K in cash. All right, so I'm not making huge, what I would call huge bets, but of course everybody's, you know, it's a little different like that. So what we want to do then, and then the key here is that we got to learn how to limit risk even in the face of an unexpected disaster, because they do happen, right? And understand and harness the power of compound gains. And it's so critical. And this is why I use one of the rules I have in trading. It's called the 3-day rule. And it's really it should be called the 3-bar rule. That means that if after 3 bars, a trade isn't working out, I cut it loose. So if it's a daily chart, that's 3 days, a weekly chart, 3 weeks, an hourly chart, 3 hours. And there's 2 reasons for this. One, because options are, if you're buying options, it's a depreciating asset, so you cut that loose if it's not working. But really, it's fully embracing and understanding and harnessing the power of compound gains, because compound gains only work if you have small losses. And that's why I'm very, very aggressive about cutting things that aren't working, even though sometimes I do that and they come back the next day. I'm totally fine with that. I am not willing to sustain a big loss, even though I know not every trade's going to work, right? So that's the key. While many traders can look back on their trading history and point to consistency some of the time, it is the patches of inconsistency and occasional position blow-up that ultimately ruins their equity curve. Again, my only goal is this, but I want to do this in such a way that at the end of the year I'm not up 20%, okay, but I'm up a huge amount, but while staying consistent. So that's my goal. Okay, and it's not everybody's goal, it's my goal. So the goal with this obviously is that you don't want to do like this. So it's very common for people, they start eating like a bird, i.e. taking small profits, but when they do lose big. And I'm just wondering who this guy is. How did he sign up for that? Hopefully he got paid a lot to pose for that photo. Okay. So what to know? So options, especially weekly stock options, are rigged with what I call explosive gamma, a trait that market makers pounce upon, and this is by design. Okay, this is so they can pocket your money by essentially taking it right out of your account via rapid changes in price at key strike levels. But there are windows to work in that are outside of this manipulative time pool when traders have a huge edge that they can exploit. And again, the funds can't do this, all right? They can't move. There's not enough liquidity for them to do this, but we can. So before we get into that, I want to show you this tool. Just for those of you that are newer, I just want you to understand the whole idea of time decay, okay? So if you buy an option, so if you buy, let's say IBM, okay, is at $100, and 120 days out, the at-the-money call is $7, okay? Now, let's just assume that IBM stays for 120 days, trades exactly at $100, okay? Like it doesn't go up, it doesn't go down, it's $100. Well, the $7, $100 option, it's going to lose that $7 and be worth zero, and it's going to lose like this. So the first, that first 30 days, it'll lose a little bit. The next 30 days, it's going to lose a little bit more. And then the next 30 days, and then the last 30 days, boom. But there's a sweet spot in here that I want you to realize, that there's a spot here that's about the last, 5 days that's kind of hard to time, but then there's a sweet spot of about 10 days that's fantastic, and that's really where I'm focusing, okay? So that's a key thing to understand. And most traders don't understand this, and they just get it wrong. Okay, they just don't know. They haven't done it long enough, and they have no clue as to which options at which strike prices they should be trading, whether they're buying calls or selling puts or doing, or frankly, and this is the part that you guys are going to be shocked by, I think, even things like iron condors. Okay, because guess what? If you're using the expected move, and I'm a big fan of the expected move. But if you're using just the expected move to set up iron condors, there's a reason why your results are not going to be consistent over time, and it's kind of scary. And finally, a lot of traders just don't know how to protect their trades, or like the 3-bar rule. The 3-bar rule is actually pretty awesome for getting out of those trades when they are not working. So yeah, so that, you got that picture there. So the main thing here with weekly options is that I do 90% of the time when I'm doing a trade, I like to have some kind of premium sale in there, but there are times when I like to buy them, okay? But I want to emphasize that I only do that with bi-weekly options, okay? So I pass on this, and I'll show you what I mean here in a second. And well, here let's just dive into that, because that's just a lot of things here. So let me show you a couple of examples. So this to me is kind of like a perfect setup. So this is NVIDIA. This is a trade that we just did, and you'll notice here that I bought calls, that were 8 days out. Now, when I got them, we were about, I think, 12 days out, and that's by design. You'll notice that they were not 3 days out, and that's by design. And then I also sold a put spread. And so you'll see that it's positive theta, and all positive theta means that if NVIDIA were to trade sideways, we'd still make money. Even though we'd lose money on the calls, we'd make money on this, okay? And the reason I structure trades like that is because of the consistency, okay? Now, where this gets fun is that sometimes you'll get an extra signal where instead of just, say, doing 10 contracts, you can goose it up a little bit. So on this particular trade, and this was just for a day, I did a larger amount of calls, okay, but just for a couple of hours, because although we had a daily signal, within the context of the daily signal, we also had an hourly signal that we texted out. And so we stayed in a large position for just about 3 hours, so no overnight risk. Turned into a huge winner, and then we took it out, okay? And so part of this is being able to capture once in a while these movements intraday on a larger portion of it, but then before the market closes, you take off like 70% of this trade, okay? So you don't have overnight risk. And this may happen once every couple of weeks, and that's a real key piece of being able to exponentially grow the account. The other thing to keep in mind here too, and this is another one on NVIDIA, is that in terms of when to do these options, is you've got to know when to do the ones that may expire in a couple days versus the following week. And most of the opportunities I'm finding, again, are bi-weekly, meaning they're popping up the next week, meaning that today is Thursday, right? Today is Thursday, but we actually not necessarily, we're not looking at selling options this week, okay, that expire tomorrow, and we're not necessarily looking for options that are expiring next week, but we're looking for options that are expiring essentially 10 days from today, and this is 10 to 15 days from today, and that's really, really important for a couple of reasons, which I'll get to. And this is an example of Apple, and that's a pretty easy trade. Again, 10 days out. So what this all comes down to, and I don't want to get too esoteric for those of you that are newer to options, because options does not have to be complicated in any way, shape, or form. But the how, I think that, yeah, and John, so that 10% of the account value is for overnight exposure. Okay, it's overnight exposure. So that kind of a thing, like on Google, that'll happen, maybe once a quarter, and of course you don't obviously have to do that much. But that was one trade. So so if we look at the way options work, they're all priced by what's called the Greeks, okay? And the Greeks is 100% what? So do you think the Greeks are actual or theoretical? And just show it. I'm just curious what you think. Do you think the Greeks are based on actual or theoretical things? Yeah, so it's all theoretical. And it's so important to keep in mind. And for those of you that don't know, all the theoretical just means that, hey, you know what? Price action, if this is NVIDIA, and NVIDIA is at $150, then it's just saying that theoretically it should, it has a 68% chance of staying within plus or minus $5, based on the Greeks, okay? And that's 100% theoretical. And if you think about that yes, and that works generally 68% of the time, but there's a huge, huge flaw in that. So what do you guys think if we're basing all of our decisions and the options are priced based on theoretical stuff? What is the huge flaw in that? Or can anybody guess? Like what is the glaring flaw if all you're doing is working off of theoretical stuff? Exactly, Shark. So theoretical is just that. It's theoretical. It doesn't always work. So here's what I want. So this is a position I have in Apple right now. So in this trade on Apple, and you can see, of course, it's very much positive theta, and these options are next week, not this week. And by the way, one of the things I want to make sure that people understand the whole max risk thing. When I put on a trade like this, and it's a spread, I'm not going to hold it until, if it's not working, I get out. Like, so yeah, there may be things that, nasty things that happen. I sold it for $1.66. It doesn't mean that I'm going to hold it for a max loss if it doesn't work. I mean, you know, if this thing goes up to like $2, it's like, well, this thing isn't working, I'll just get out. Okay, so I want to, you know, emphasize that. Anytime I set up spreads, that max risk, I'm not really, this doesn't come into it, you know, this doesn't come into play. So I think it's important to realize that. So here's the part that I want you to, oh, let's come back here. So and again, for those of you that are, if you don't know, every option is priced theoretically, based on Greeks. And you'll see this, and it's done by computers. And essentially, and this is really important, so Apple for next week, theoretically, the options are priced for a $3.46 expected move. Okay, what that means is, you know, we're at 154.99, and the options are priced for a theoretical move of up $3.46 from there, or down $3.46 from there. Okay, now 68% of the time, Apple will stay in that range. You know, it may come up, it may come down, but generally it's going to stay in that range. But the one flaw here, okay, there's two huge flaws. First of all, this is theoretical. It doesn't take into account actual. But the other thing is that, guess what? Certain stocks at times will more often than not break through one level or the other. Okay, so it's sometimes Apple may, you know, yes, theoretically it's 346 either way, but if you look at the actuals and you look at the stats, it's not weighted this way. In an uptrend, guess what? The upside may be $4, okay, and the downside may be $3.50. And that's actually a really big deal. And so okay, so I started thinking about that. I'm like, well, is that really accurate? So check this out. So by going through and measuring the actual stats, not the theoretical, okay, so we set this indicator up to go back and analyze the last 268 two-week clumps. And based on that, it projects for next week, okay, the actual expected move to the upside and the actual expected move to the downside. Notice they are not the same. Okay, so for next week, while the theoretical move for Apple is $3.45, the actual for the upside is $4.22, and the downside is $2.55. That is drastically different from that, but that gives you an edge. I mean, look, nobody does that. I mean, this is an edge that other people don't have. So why is this an edge? Well, guess what? If you're going to sell an iron condor for income and you sell, you know, based on the expected move, you're going to lose money, and that's not consistent. But if you do it this way and you sell, you know, in this case, 1.5 standard deviations on the upside, and then you come in a little bit. And by the way, the puts are always more juicy, right? And you can do like 3/4 of a standard deviation here. You get a fatter, higher probability premium. Okay, does that make sense? And so that little piece of information there is what put me over the edge because of a couple things. One, if I've got calls on, all right, I am not as concerned about the quote-unquote theoretical target of $3.46. I'm looking for the actuals, because what happens too is when we start pushing through that theoretical, it gets goosed. And this is telling us that the odds of it pushing through that theoretical are high, which means the option prices in this case are going to get goosed, and we're going to get a little extra cash in our pocket. All right, does that make sense? I know if you're newer, this might be, it's like, huh? But all you got to do is just, when you see this, is just say, look, within the Greeks, the idea that this thing is going to stay within its quote-unquote theoretical values is asinine. The odds are that it's actually going to blow through the upper range, okay, which means that the pricing of those options is actually mispriced, and we can take advantage of that. And we can afford to sell closer in the money puts, okay? So does that make sense? Yeah, so the beautiful thing about this is that you can just, like here you just, whatever indicator you want to put it on, or whatever stock you want to put it on, and you can then compare this to, the theoretical moves and all that kind of stuff too. So I have found this to be a very, very, very useful tool. Now, the other thing you can do with this is there's two tools, and this is the one to me is the most powerful. It's called the biweekly, and it's great for, it's selling premium, but again, for targets. Okay, so, for Apple, to me next week, I'm not worried about that 346. Next week, like tomorrow in the room, you guys remind me, we're going to sell this iron condor, okay? And we're going to do something that's structured to take advantage of a smaller potential down price movement, but a bigger potential up movement. And what the beauty about this is that this does not, all this does is look at this particular stock, okay? And where this gets a lot of fun, and by a lot of fun, I mean a lot of fun, is that when you start looking at things like, Alta, or slightly thinner stocks, you'll see these things which are fantastic. In fact, here, let's look at Alta here. So the expected move for Alta for next week is, $7.53. Well, we can see that what this is telling us is that the upside potential is actually $10, okay, while the downside is $7. So this is just, it's turning that whole idea on its head. So it's got $7 of downside, $10 of upside, okay? So, I mean, this just has huge implications in terms of being able to structure trades profitably. And what this is great is what this tool does the same thing, and it goes back, again, you can go back like 268 weeks or 269 weeks here, and it shows you week by week what the actual levels were. And so I use this like for targets and stuff like that too. And so that's, again, what we're talking about is math and statistics versus theoretical. And that's the kind of stuff that I find pretty exciting there. Okay. So anyway, I just thought that was cool. So it sounds complicated. So the good news is you don't have to know anything about options to do this strategy. This is a perfect strategy for newer traders if you've got small accounts and you're looking to grow them quickly. And the option strategies are safe. It's nothing naked or anything like that. And so I can walk you through that whole process. And so what we want to understand here is trading truths, okay? And in trading, what I've found over time, and it's been kind of painful, is that in trading we don't get what we want. We just kind of get what we're trying to, what we are and what we're projecting onto the screen. All right, and if you're unsure about what you're doing, you're going to be fearful, and if you're fearful, you're going to take actions that create consistent losses, okay, that create an inconsistent equity curve. And so if you have tools that can kind of alleviate that fear, you get on the road to consistency. And if you're overconfident, you're going to take actions that ignore risk and create huge losses, okay? And you can see that this year, I've grown my account exponentially. Obviously I've taken risks, but over the course of, a lot of time here, and I've had trades that have not worked, okay, that have, it's not like every trade is working, but I'm not ignoring risk, okay, I'm not ignoring risk. So the bottom line is if you don't have the right mindset, it's not going to work. And to get the right mindset, you've got to have the right tools, because the right tools give you confidence, and once you have confidence, you can have the right mindset. And trading is tricky because we can do it from the comfort of our home or office, familiar surroundings, and this lulls us into the belief, and this is a really subtle but important thing, but when we're in familiar surroundings, it lulls us into the belief that we don't need specialized skills, right? You don't need a specialized skill to get out of bed, put on your robe, and brush your teeth. You're in the comfort of your own home. You can be relaxed. You can be blasé. I don't even know if that's a word, but you do need specialized skills. And that's the key, okay? So you can't, if you're trading in a comfortable environment, it doesn't mean you can be comfortable. And I love this quote from Mark Douglas: to whatever degree you haven't accepted the risk is the same degree to which you will avoid the risk. And trying to avoid something that is unavoidable will have disastrous effects on your ability to trade successfully, okay? And whenever people come to me and say, John, I don't know if I can do this. I'm scared. I'm fearful. I'm in a slump. My last 3 trades I've been losers. What do I do? I like to refer to this quote. Okay, this is great. Baseball player from way back when. And he just says, when I'm in a slump, I comfort myself by saying, if I believe in dinosaurs, then somewhere they must be believing in me. And if they believe in me, then I can believe in me. Then I can bust out. I don't know. I just thought that was a funny quote. So, hey, if it works for him, it's not that hard to turn the switch and be confident in yourself, okay? Okay, so I want to answer some questions, but I also want to show you, I'm going to do a more detailed class on this and just dive in. I'm going to hang around here and answer your guys' questions. If you are interested in doing a class with me on this, I'm going to do one next Saturday and go through this stuff in detail. If you're interested in this, just type this into your browser, simplertrading.com/weekly, and this is what it looks like. Now, I'm also going to show you something else. I'm setting up a new smaller account, okay? A new smaller account to do this, so I can text out the trades to you, and you guys can position your position size more accurately, and I'll show you that in a second. So how this is going to work is on Saturday, June 12th, I'm going to dive in, and we're going to talk about the strategy class, but also included with this class is the biweekly stats tool. Okay, that tool alone will pay for the class. So those two items will come with that Saturday class. And again, this will be it's like 4 hours or so. And I'm just going to lay out exactly what I'm doing. Okay, so this year I've taken my account from 117,000 to 778,000. You guys have seen the trades that I've been doing in the room, but I'm going to lay out the philosophy behind it. I'm going to lay out how I'm using this tool, both for targets and to set up premium, how and why I look at the markets and say, okay, if I'm going to wire out 2.5%, what trades am I going to take? But more importantly, what trades am I going to skip? Okay, when I'm in the trading room, there's all these different trades we could do, but I only end up doing 3 or 4. Why? Okay, well, I'm going to show you the specific criteria that I'm looking at. What I really encourage people to do is that the strategy class is good, but what we call the professional package includes the strategy class, includes the biweekly stats tool, but it also includes that weekly stats tool that I showed you, and 3 days of live trading. Every class we've done this year and last year, and we can't guarantee this for obvious reasons, but every class we've done, people have been able to make enough money trading a one lot to actually pay for the class. So that's obviously a win-win. You get a good return on your investment. And then for those of you that are interested in all this, plus if you'd like to get text alerts on my trades over the next 6 months, we also have a program here where you get all this plus 6 months to our gold membership. Now, if you're already a gold member, don't worry about this because obviously you're already on that, but this is essentially a way where you guys can lock in 6 months and commit to the next 6 months to trying to make this happen, okay? So that's that. And then for those of you that are interested in Tastyworks, so I got an account open. Tastyworks is a new brokerage platform by Tom Sosnoff, and you can see here I put $50,000 in this. I have not done any trades in this. I'm going to take my first trade in this platform with this class, okay, with the 997 class. I may do a couple of trades to get the hang of this, but that's when I'm planning to start trading this account, and I want to see what I can do with this account. With 50K, I want to start wiring out 2.5% per week and growing it. But this way you guys could follow me on a smaller account because obviously my big account is already off and running. I'm obviously going to continue to grow that. I'm going to continue to show you the trades. But, so anyway, so I think that'll be cool. So if you're interested in following me on this and actually using their platform, because their platform has it's a faster platform, tighter spreads, and cheaper commissions, use this link right here, simplertrading.com/TW, all right? If you use this link, you're going to get an hour plus of free training to use the platform. But if you don't use that link, you won't get credit for the course. So if you're going to take the class and you're interested in the Tastyworks platform, and if you already have one, that's great. But if you're interested in doing one, you only need to fund it with like $2,000. But if you use this link, we'll be able to then see it, and then we can give you free access to the training that we've developed for this platform, which is pretty awesome. Okay. All right. So let's go here and let me see and then let's come back here and see what kind of questions you guys have. Why? You know what? Why did I pick Father's Day weekend? I don't know. I'm sure my wife was like, why are you doing a class then? So the good news is that if you've got a lot of plans on Father's Day weekend, okay, which is understandable, this will be recorded. Okay. And you'll be able to watch it after and stuff like that too. So that's totally fine, and I obviously totally understand. Father's Day weekend for me is going to be Sunday. All right, and so Dan, good question. So the expected move. All right. So remember now, I still use the expected move tool for all the reasons I talked about. The expected move tool shows us the theoretical moves, okay, the theoretical moves that the funds are looking at, okay, and that is important. But the statistical tool it shows us whenever there's an edge, okay, because there's going to be times when statistically, yeah, A stock, statistically, if a stock and the expected move are in alignment, guess what? There's actually a much greater than 68% chance it's going to stay in that range. But what we're looking for is when the statistical tool is showing that like an upside or downside target is more likely to be breached, that gives us incredibly powerful information that we can use, not only for consistency, but for outsized gains. And Taz, and that's fine. I know, and not everybody is ready for something like this. The main thing with this, and this is how I structure these things, is that look, it's a reasonable investment with the goal that you can earn your money back quickly by learning the strategies. So that's just the way I look at it. I mean, I see courses out there that are like, hey, learn to do this. It's like $5,000. It's like, nah. But I mean, doing something like this, I think it's reasonable. I have had many people tell me that I shouldn't even be teaching this stuff, but I don't mind doing it. And honestly, it's, sitting there just trading by yourself is kind of lonely, but it's like one of those things like, hey, you know what? If I can screw Wall Street and screw the robo-advisors and screw the high-frequency traders and get kind of a group of people all on the same page, not only can we make a living doing this, but we can kind of take money from them. Because the reality of it is when we're making money, we're taking it from Wall Street, which pleases me greatly. Okay, so good question. So Kay Pyle's asking, all right, so this looks awesome. I work full time. So do I have to day trade to do this? And the answer to that is no. So I showed you the one Google trade. There's like probably literally 3 trades this year that I would call a day trade. All the other ones, I'm typically in a trade on average from about 3 days to 14 days, okay? These trades are texted out. I place my targets and my stops, mostly my targets, the stops I do as an alert, as good till cancel orders, so I actually don't have to watch them, okay? And it's great. And what will happen a lot of times is I'll be at the gym and I'll get an alert on my phone like NVIDIA has hit your target. Today we had a put credit spread on NVIDIA, and I didn't even realize I'd gotten out. Like it had hit my target, and I didn't even know it. I didn't know it till the end of the day. I was like, where'd my NVIDIA go? It's like, it hit your target. I'm like, oh, okay. And so that's the stuff that's kind of nice like that. Oh, good question. So in terms of Tastyworks, so at some point we are going to have our indicators developed for their platform, but right now they're in development hell. And again, if you use this link, because this link establishes you as our client, okay? And if we know that it's like, oh, you open it up through us, you're our client. First of all, there's 2 things that happen. One, when Tastyworks sees everybody coming over, they're like, okay, this is awesome. You guys are helping us out. What do you need? Well, we need you to put our indicators on your platform. Awesome. And then 2, then when we do that, if there are some of them that we're going to build out, and sell, well, for those of you that signed up with this link, we're going to know like, oh, you already have it. You already bought the TOS version, so we'll just give it to you, right? So it's a way to save money that way too. So I would definitely highly encourage you to use that for that reason. Okay, what other questions do you guys have? How much should you put aside for paying taxes? Well, some people do this in an IRA, so obviously that's nice. That's a nice problem. But when I talked about, wiring, I mean, it's going to be different for everyone, right? But it's like, it kind of depends on your tax bracket. So, let's say if you're, so I always say like, look, set aside, you want to plan on your tax bracket, right? Because it's shorter term stuff. But also, look at there's other things that you can do. And by the way, I think later on in July, we're going to have my CPA come on and do a webinar, like ways to save money on taxes, different things like that. So just make sure you're taking advantage of all the tax deductions that the government has to offer. And then, from there, you pay your fair share and move on. And then the class, so a good question. So the class is not this Saturday. And this Saturday we're going to, but it's next Saturday, the 17th. So if this is something that you like, I'd encourage you to sign up. And what will happen is we can then start getting you your indicators, and you can start playing around with them and stuff like that too. Oh, awesome. Yeah, and Robin, also, so when we're doing the live trading, yeah, and there's other tools, tools that you guys already have, like the Voodoo lines. If you have those, we'll be definitely doing some stuff with that. It'll be a lot of fun. So, and the great thing about the live trading for this class in particular, because the classes I've done so far, a lot of them I've spent time on, like, okay, here's a specific tool. But a big focus on this class for Saturday and for the live trading is going to be like, okay, yeah, you can have the right tools, but if you don't have the right money management, if you don't have the right position sizing, if you don't have the right mentality and attitude towards this, it's going to be hard. And so we're going to be spending a lot of time towards that as well. I'm going to show you like some of the books that I think are must-haves. And then just the psychological tricks that you need, because sometimes there's days when it's like, oh my God, I'm up so much money. Like that can screw you up. You get into like, you can get into self-worth issues. Oh, that's too much. And you can get into a self-destructive pattern. Like, I don't know how many of you, you make a lot of money and then you give it all back. That's all psychological crap. I'll show you how to break through that. Different psychological tricks to get through consistency, in addition to having tools that you can have faith in and have confidence in, so you're not freaking out when you're doing this. David, yeah, so the expected move is the theoretical move that all the institutions are looking at, and it's very valuable to know what the institutions are looking at. The statistical tool is based on the actual stats of the last rolling couple of years of weeks, and it shows you what's more likely going to happen. So you have the expected move, which is theoretically what should happen, and then you have the statistical tool that shows you what's more likely going to happen. And you saw in the case of Apple, the idea is that more likely, instead of having an expected move of $3.50 to the upside and $3.50 to the downside, more likely it's going to be $4.25 to the upside and only $2.50 to the downside. That is a very powerful amount of information for setting up iron condors, for setting up butterflies, for setting up targets, for being able to sell put spreads that have a little bit more bang for their buck in terms of income. Can you describe the difference between an aggressive bet and a huge bet? Yeah, so I always look at things, and I'll show you guys on the Saturday class a checklist, but I generally will do quarter size, half size, 3/4 size, or full size. So every trade has to meet criteria for this. So I don't, like, full size to me would be 10%, okay? And then of course quarter size would be 2.5% of my portfolio. So I've got a checklist if I'm looking at something, what I'm going to look at there. Okay. Oh yeah, good idea. Yeah, and for those of you that I see some people asking like, hey, I need to call. If you have questions on any of this, we're here, so you can. Let's see if I can. I know I can do this. For questions, how about this? I did this one time and I put up my cell phone number accidentally, which that was kind of funny. Questions, 512-266-6659. Yeah, so feel free to give us a call here if you've got questions, different things like that. No, good question. Is the triple squeeze tool now obsolete? Absolutely not. So when I'm doing this stuff, okay, I've got 6 monitors. I'll have the triple squeeze on the left, and I'll have the RAF on the right. And what I find is it's just combining these tools. It's just combining the tools. And I'm a big believer in just what I call stacking. Like, it's not an either or, it's a stacking process. And so you remember when I was talking about, and here's how I use this different stuff, okay? So when I was talking about my 4, there's, and this is actually the most important part of the trade. So 2.5%, 5%, 7.5%, or 10%. So how much of my portfolio, like if I'm buying options, am I gonna buy, if I've got $100,000, right? Am I gonna buy $2,500 worth of options, or am I going to buy $10,000 worth of options? Well, I'm going to buy $10,000 worth of options if I've got more things that are lining up. If I've got a triple squeeze, right, and I got an RAF, then yeah, I'm going to absolutely. So I'm going to go through the different criteria. You don't need all the indicators for this, but it's just how I rank everything. So it just stacks, and I find that it depends on your goals. If your goals are like, well, I'm just looking for income, well, great. This statistical tool is made specifically for that. It's like, well, I'm really interested in squeezes with RAF turns. Awesome. And you can do that on your own. What's nice about this statistical tool is it shows you the likelihood that a stock's going to break through its expected move. Like the theoretical move sometimes really doesn't matter, and that's just powerful. And it's that little extra edge to create that consistency. And when you got consistency, you can compound your gains, which is fantabulous. Is the biweekly indicator the same as the last class? So no, the biweekly indicator I've never showed before. So we have an expected move indicator, which is showing you what the Greeks are telling you, but then the biweekly is showing you what's actually more likely going to happen, because it's actually based on the actual movement of the stock. So like that, when we looked at Apple, that example, so the expected move tool, okay, is going to show you what the Greeks are showing you. So that was, 350 to the upside, 350 to the downside. The stats tool is actually saying, no, 425 to the upside, 250 to the downside. Okay, so that's actual versus theoretical. And that's the edge we can exploit, and it can be a huge edge. Over time, compounding, it can be a huge edge. Minimum capital needed to trade this strategy. So I'm the first one to say that if you have, the more capital you have, the better. Meaning that if you've got $500, can you do it? Yes. Is it better if you have 5,000? Yes. So I know with Tastyworks you can open up an account with $2,000. But even if if you haven't traded before, and even if you have if you've got I've got 50 or 100, great. Start with 10. Learn a strategy, do 25 trades in a row, and if after 25 trades you've made money, now you're on to something. Because remember, in the course of 25 trades, you're going to have one or two trades that absolutely suck. You're going to have your normal losers, right? So if you do 25 trades, 25% of them are like, Now those losses are lessened by doing the 3-bar rule, because with the 3-bar rule, you're getting out before your stops hit, which is awesome. And again, that helps with consistency, and that helps with compounding. So yeah, so there's just different things like that you can do, which is great. Let's see. Okay, good question. So John's asking, well, will the elite level work if I'm working during the day? So the whole reason for the elite level is it appeals to two types of traders. So for full-time, we have a chat community, okay? But it's geared specifically for people who work, okay? And we be via text alerts. So, and this tool now is getting really refined. We're now starting to be able to do it in real time. We're continuing to develop out this iOS app. But what's nice about this is if you understand the strategy and you can learn to read the orders, you can be sitting there in a meeting, get the text like, oh man, John's, he's got this thing on Apple and he's doing this, and you could do it on your phone, you could do it on your iPad, you could do it on your computer. And which is, that's awesome. And look, and I love that, because that's what I used to do. And when I worked full time, I was trading as best I could, but I had meetings, I had things I had to do, and I didn't have, when I was doing that, there wasn't a mobile app, right? I had to go, back to my desk. I had to get on my phone. I had to call my broker, and it was just about the time that online trading was coming out. So it's way easier to do this while working full time today. And the nice thing is like, since we're doing this full time, you don't have, the hardest thing about trading is pinpointing specific moments in time that are going to give you a high probability of success. And you can learn to do that yourself, or once you learn the strategy, okay, say, okay, I understand that, now I know how to do it. So can you guys just tell me when this happens? And that's what we do. So we'll sit there and say, hey, look, we filtered through all this crap, and here's the 3 opportunities that we're taking today, and we text them out to you, which is great, and that's worked out really well. Okay, good question. So how will I differentiate alerts in my Tastyworks account, which is smaller? Good question. Usually it's position size. So what I've been doing is to help make it sense is actually posting my actual position size. So, obviously if I'm doing a 200 lot trade, that's in my big account. And if I'm doing like a 3 lot trade, that's going to be in the smaller account. So, but if it's not clear, if I do a 10 lot trade and it's a starter position in my big account, I'll clarify that, like, hey, this is in my big account. Do you get text on the 497 course? Okay, so for good question. So on the 497 course, so this is going to be on a Saturday. Okay, so there's not going to be any live trades on it, but you're going to learn to do the actual strategy. So after Saturday, you could go out on Monday and do it yourself. With the professional class, since it's going to be live trading, we would be texting those out. So for those 3 live days, if for some reason you work full time, you're like, okay, cool, I want to see how this is. Okay, but you're like, I don't know about this whole 6-month thing. Well, if you want to do the 3 days, we'll have text alerts just for those 3 days as well. So then that's what happens sometimes. Like people work and like, well, I can't really do it. But the nice thing is we can send you the text alert. You can follow it, and then later, like that night or on the weekend, you can then watch the recording and go, oh, awesome! Now I understand why they did that trade. I'm glad I took it, and yada yada yada. Scooney is saying, while I am pretty new to simpler options, not quite 3 months, I've already taken several trainings, and what JC says is spot on. Oh, that's good. Each course has paid for itself immediately with trades taken during the live trading. That's awesome, good. And not to mention the huge difference in trading. Well, look, I mean, that's the whole point of this, right? And look, to be blunt, there's a saying that I heard the other day, and it was pretty funny. And anybody on the internet can sell, and again, pardon my French, but anybody on the internet can put together some kind of a promotion and sell shit in a box, right? But if you sell shit in a box, it's not going to work. People aren't going to come back. This is good stuff. This is stuff I'm showing my kids how to do this. If you guys follow me like on Instagram or Facebook, I've got pictures of my kids that are like 11 and 9 trading. Okay, this is, you see, this is really stuff that I believe in, and it's not, I want it to be something that's going to help you, and I want it to be something that is actually going to work, and I want it, a year from now, it's like, hey, I was able to quit my job and stuff like that, and that's great, and that, that to me is way more important than, oh, let's make money to do a class. But so, hopefully that makes sense. I mean, but this is what we do. If we weren't charging for this class, then we couldn't have a team of people that would help, because obviously, that costs money and stuff like that too. Oh, good question. So here's what you do. So if I'm doing a trade, okay, and let's say that I'm doing a trade for that 50K account, right? And you have a 10K account. And if you want to mimic it, right? So if I'm doing a 10 lot trade, then you do a 2 lot trade. So that would mimic the exact same amount of risk on a percentage basis. Now, if you're more conservative, and this is part of what we'll talk about on Saturday, if I'm doing a 10 lot trade, you're like, that's, I'm going to do a 1 lot trade in my 10K account. That's totally fine too. And I'll help you establish how to do that. Okay, because the main thing is you don't want to be freaking out, and over time, I'll show you how to build up your intestinal fortitude, so you don't freak out in trades. When will Tastyworks open in New Zealand? As far as I know, Tastyworks will be available internationally soon, and futures, if they're not already. I know they're balls to the wall trying to get all that stuff figured out. Yeah, in here, let me put that again, the Tastyworks. I see a couple of questions about that. And if you've already got a Tastyworks account, that's great. If you don't have one, look, it's a great platform. And here's what a lot of people do is they set up a Thinkorswim account because there's a lot of tools on that, but then they So they'll open up a small account with Thinkorswim, and then they'll open up a Tastyworks account and put money in there because the commissions are so much cheaper and it's faster. But if you go to simplertrading.com/TW, you'll be able to open your account and possibly get it funded before the class starts, and if you want to follow along. And I'll be doing my first trades. I'll be trading both accounts, but I'll be doing the first ones there. But if you do this link, then you'll get credit, and we can give you our free training for the platform, which is a class that we did on how to use the Tastyworks platform. Plus, when we move the indicators over, and if you already have them, you get a free license for that, so which is awesome. And I'll put this down here. So www.simplertrading.com/Tastyworks for the account. It's always confusing to have two links, but that way, in case you know. So this is for the class, and this is for Tastyworks. Okay, let me see. Yeah, so Wayne, so what'll happen is over time, we are going to start transferring our tools over there. Yeah, so as soon as we do, then yeah, you're good to go. And if you go to the page, by the way, if you're looking at more detail, and go to the page itself, and I can scroll down here with you. Where'd it go? So when you go to the page, there you go. So just scroll down, and it'll talk more about, like, here's everything that you get. Here's the 2-week indicator, the 2-week stats indicator. It tells you how it works. Here's the professional package. Here's the dates. And it talks about the weekly price statistics indicator, which we'll also be using. And that's the 997. And then it talks, so there's a lot of info on here, so you can understand like what it is and stuff like that too. All right, so now let me, my graphics card is freaking out on me. Okay. Oh, Greg, so if you just bought the RAF and the Voodoo lines, we did a training Monday of this week, so like 4 days ago. So you should be able to get a recording of that, so you can see that. Yeah, and I can obviously show you during the live trading too. You can't go naked in an IRA or use margin. Well, good news is we don't do naked options, and then but you can do spreads with an IRA at Thinkorswim, and I'm not sure if Tastyworks has IRAs available yet, but I know you'll be able to there too. When you set the trades, do you set and forget? Yeah, so when we set the trades, the goal is to take, you don't want to figure out what to do then. So I like to set my targets, and then, so for stops, I'll have a hard stop, but then I have a 3-bar rule. So a lot of times, I get out of a trade before my hard stop is hit because it's violated my 3-bar rule. If after 3 bars it's not working, I just get out. Yeah, Kevin, no kidding. Definitely the tax class. You know what? One thing somebody told me that I could do is like with land, like out in the country, like in Wimberley, you can put it into a conservativeship and then deduct the value of the land if it were developed, which is a huge tax deduction. But then then you can't develop your land. So it's like, well, that might not be a bad idea though. So I don't know. I've been thinking about that. I don't know if anybody else has done that. Okay. Bob, that was awesome. Don't forget. Oh yeah, so for the indicators, so here's so let's look at so we were looking at Alta here. So here's like Tesla, right? So for Tesla, and if we look at Tesla, right here, and I've got a position on Tesla right now. So if we look at the expected move, okay, for next week is $17, okay? So the expected move based on the theoreticals is $17, and if I can find my calculator here. So if we look at then the actuals based on the stats, okay, so we closed at 371 or 370. So we closed at 370, and if you look at this, so Tesla's actually even blowing through it. So, but we'll look at, so the upside expected move for this week, so 359.98 minus 338.50. So the expected move was 17, it's moved 21. So to the downside, 338 minus 325. So the expected move is 17, but the downside expected move is only 13. So what this is telling us is that we have a very high probability of chance of selling puts that are actually within the expected move, which means they're a lot fatter premium, which means you get greater consistency. Okay, and Tesla's obviously a very unique case. I mean, this stock is going insane. But one stock, let's look at Facebook. Okay, so Facebook, very respected us, yada yada yada. Well, for next week on Facebook, and by the way, this is a trade I'm looking to get into tomorrow. So for next week on Facebook, we're looking for $3.47 expected move, kind of similar to Apple. Well, if we look at the statistical actuals here, then we have 154.71 minus 158.11. So upside, so 340 to the upside, and then so you'll see right here, let me do, so you got the upside expected move into next week versus the downside expected move. Okay, so the downside expected move, I mean, you can eyeball it and you can see it's smaller. And so you can sit there and say like, okay, well, I could sell the 150 puts, do it as a spread, but if I was going to do the calls, I'd want to sell something above 158. Okay, and again, it's just telling you, it's like the chances of this having a bigger upside move is just very, very high. And I use on something like that, then I can use, like if there's a squeeze, it's like, oh, great. Not only could I sell some puts here, and I could sell them pretty close to where we are, but my target to the upside, statistically, it's got a chance of getting up to 158 versus the mere expected move. And if you look at something, like the S&Ps, SPX, it's usually a lot more uniform. So it's usually a lot more uniform just because it's a lot quieter. So I've just found it super, super useful for that kind of stuff. Julie, so I do a combination of credit spreads and directional. So a perfect scenario for me, if there's a specific bullish setup that I'm looking at, I'll buy calls at a specific strike on a specific setup, but I'll also take advantage of this to create what I call, more of a theta positive position. So like, okay, I'm going to buy 10 calls and sell 30 put spreads, or buy one call and sell 3 put spreads if you have, if you have that. But where this is also really useful is if you want to create, call debit spreads or diagonals, it shows you where, where to sell those calls above so you don't get taken out. Also, on Saturday, I'm going to show you guys a back testing tool so you can actually apply like, okay, which option series works the best? Is it, options that are 2 weeks out or 1 week out and different things like that. So it's a really, really, really cool stuff like that. Yeah, so K-Pile, so what I'll do during the class, and this is what I do, is I give you information that, look, if this is all new to you and you're like, okay, the statistical tool looks cool, you can make a living using just that. I will show you other tools that I use. Some of them are free. They're already on your platform. Some of them are things that we created that you don't need, but you can see how I use them, and you might say, well, that makes sense. Okay, and that's up to you. But the idea is that you'll be able to get into this class, learn strategies, setups, and tools that can take you to that you can use and start getting consistent. Do you enjoy an IPA or a stout? I prefer an IPA. All right. All right, guys. Well, let's see. There's a lot of questions here that, oh, after 6 months, it will be an exclusive membership for trading. Yeah, so after 6 months, so the nice thing is you get to take advantage of this, for 6 months and kind of lock that in. And then after that, if you want to stay, there's like it can roll into like a monthly, monthly text alerts and stuff like that. It's like a monthly thing. Do you target 50% on your biweekly iron condors? So I actually do 80% because this gives us a higher probability of success. I'm able to extract a little bit more credit out of that. Is this only selling options? No. So I typically like to do a combination of plays where I do a directional and a spread. So if you're not familiar with spreads, and I get that some people that are newer, spreads might seem a little weird, you can actually just do this buying calls and buying puts, but what we encourage people to do, and part of what we do with this class is we'll send you some homework. So if you're newer, it's like, hey, look, here's a beginner's options guide, and here's a beginner's guide to doing spreads. So at least you're up to speed on that. So you shouldn't be, if you're newer to options, I don't want you to be scared of that, but I also expect you to go through the homework because during the Saturday class, I'm not going to answer questions like, oh, what is a call? Well, if you don't know what a call is, you shouldn't be in the class, right? So there is that expectation, but we provide that information for you and give you a chance to, and obviously if you're an intermediate to advanced trader, you'll be locked and loaded. You'll be ready to go. Let's see what else here. Oh, what do I get access with the gold membership? So with the gold membership, there is a live trading room. So there's a whole community of us, sometimes 800 to 1,000 people, and we're all helping each other out and stuff like that. But if you work full time, that's okay. It also includes text alerts, and a lot of people do that. They work full time. They may pop into the room once in a while, but they rely on the text alerts. And then we have a nightly video recap. Then there's a forum where you can do like Q&A, I think, if we're still doing that, and a few different things like that. Do we send the trades out by email? I believe there's an email recap that goes out, but if you want to get them the quickest, the text alerts is definitely the way to go. Oh, yeah, sorry, I didn't even go over this. That's funny. Is the stuff at the top of your charts included in the indicators? Yes, this is the money here. So it'll show you statistically, okay, the probability of times it'll touch it, okay, based on stats versus theoretical, okay? And we'll go over all this stuff, but it also tells you too that it said, look, if it goes through this level, what are the odds it's going to get to this second level here, which would be H2? Well, only 11% of the time, okay? So it gives you really good, I mean, literally it's statistics that I think are more powerful than the theoretical things, and we'll go over that in more detail, obviously. But it's very, very powerful stuff. It's giving you actuals instead of theoreticals, and if you've got the actuals, you're going to get an edge. And if you got an edge, you can create consistency and you can create compounding gains. Oh my God, that's awesome, Bill. Bill saying, I'm a stuntman for film and I made an Amazon trade that netted $5,000 for my car right as they called action. That is one of the best stories I've ever heard. I did one trade where I was, so a couple of weeks ago, I had Wi-Fi on Southwest, and I've never placed a trade on a plane before. So I was on my phone, and I bought some Tesla calls on the plane when I was in the air, and then as I was landing, I closed them, and and I did small size. I was like, let's not kill myself here. It's like 10 lots. I made a couple grand, but it really puts it into perspective, the value of your time, right? You're like, well, I got on a plane and I saw the setup and I took it, and and I don't know how many people are comfortable with mobile trading, but I can show you at least what we do and things like that too. I will travel in June, and I would like to trade along with you. Will you do this class again? Well, this particular class, This particular class, no. I usually just do the classes once, and if we do another one, it's a new topic. But what you can do if you're traveling is, if you're interested in this and learning about it, is you can, obviously go back and view the recordings, and you'll get the tools, and if you get the text alerts, and I encourage you when you're on vacation to take a vacation. But so that, that part's up to you, but at least that way you'd learn how to do it. And, oh, sweet. And Henry was just telling me too that you're going to get there's a 6-part basic course, and that includes a starter on mobile trading as well. Bob, yes, it can be adjusted, absolutely. So it adjusts to whatever time frame you're looking at. So if you want to go back 1 year, 2 years, 5 years, so just in your settings and how many days back you want to go. Can trading be done in a Roth IRA account? Yes. Thinkorswim is generally more flexible than other brokers like Fidelity and things like that too. And if you guys don't have a Thinkorswim account and you want one, I would encourage you. So here's www. Oh God, I'm gonna confuse everyone with all these links. But so here's what I do. .simplertrading.com/TOS. So I have 3 main accounts. I have TradeStation, mostly for charting, and then TOS, Thinkorswim. This is the account I showed you at the beginning. Most of you probably already have that. If you don't, and you want to get these tools, then I would encourage. And again, if you use this, you get licensing fee credit and stuff like that too. And then that way, and they've got an amazing mobile app. So what I do is I use Thinkorswim for one account. That's my big account. Okay, but it also has right now all the tools. And then Tastyworks is going to be my 50K account. Now, at some point, I may swap this because the Tastyworks commissions are lower, so it might make sense for me to swap it. But either way, I'm going to start off with and for me, a smaller 50K account on Tastyworks. And again, I encourage you to use this because if you use our links, what's going to happen is, we get more say, like, hey, you need to put our indicators on there. Or if you do have our indicators for TOS and you used our link to open up a Tastyworks account, guess what? You can freely transfer them over to Tastyworks. And so all that part is pretty awesome. Is there an advisory service? So at this point, all we do, and there's so many gray areas where if you're doing an advisory or doing auto trading and stuff like that too. So what we do right now is we text out what we're actually doing. Let's see, that's Tastyworks. That's Thinkorswim. So at some point people have asked, can you set up a fund and stuff like that? It's just, here's the deal. If we're doing a fund, we can't do this. So you kind of have to pick one or the other. We can say like, look, this is what we're doing. You can follow us, or we can shut down Simpler Trading and do a fund. And at some point, that's probably what we'll do. But right now this is fun and it works for everybody. Why Monday the 19th? So we're doing Monday the 19th specifically so we can take advantage of this tool because we actually want to set up trades based on the biweeklies versus the weeklies. I agree, Jim. It is. This is fun. I mean, I've made a lot of friends through this. I can't wait till we do our live event this week. Starting Monday, Tuesday. That'll be fun and stuff like that. Nice. Dan is just saying I'm trading full time and I work weekend nights. So yeah, it's perfect. Yeah. No, and this is kind of, once you start understanding the Greeks, it'll help. The one thing I want to emphasize is if you're newer, you don't need to understand what Vega is. If you understand it, that's great. It helps. But the nice thing is I'll show you setups that naturally take advantage of how options work. So you don't need to understand it, but obviously it doesn't hurt to understand it because you can do other things if you do understand them. Can we add on the professional from the elite at any time? Yeah, so look, if you're newer to us and you're kind of unsure about this, and you're like, you know what, let me just do the strategy class, totally fine. That Saturday, if you're like, you know what, that seemed awesome, you'll have the ability to upgrade, okay? If you're already looking at this and going like, this is a no-brainer, and I think it is, by the way, then yeah, just sign up. You can start getting all your tools, in advance, and you'll be good to go. All right. Yeah, no, it's fun. It's been fun showing my kids how to do this. I don't know if they'll ever be traders, but here's the problem. So they get an allowance of like 20 bucks a week. You know, it's like they got their chores and stuff like that. So I told them one day, I said, look, you guys are going to each spend half an hour with me and do it, and I'll show you do a trade. And they didn't really want to do it, you know, kids. And so James went first. So James did the trade, and I had him. I didn't want to show him options. I mean, good Lord. I was just like, look, you can buy the stock, and if it goes up, you make money. And so we did a 5-minute squeeze on Tesla. He bought 100 shares of Tesla, and he made like 200 bucks in like 12 minutes. And so he sat there, and he looked at me, and he goes, what just happened? I said, well, he says, is that real money? I'm like, yeah, it's like a bank account. He's like, so you mean to tell me that I do like 6 hours worth of chores every week for $20, but I just made $200? I'm like, well, yeah, baby, we got to split it, but yeah, you just made 200 bucks. So he ran back, and so he took his $100 and he bought a bunch of iPad apps. So now Avery and Dylan, his younger siblings, were like, what? So then Dylan, who's the youngest, and so each kid is different. Dylan, and we've had them like assessed, so we understand our kids. They're totally different. You know, Avery's like total sensing, feeling introvert. James is kind of in the middle. And then Dylan is, quote unquote, wired to win, which is like a personality trait. Like he doesn't care about feelings. He's just like, okay, that's the end goal. How do I do that? So as soon as he heard that about James, he dropped everything he was doing. He ran to my cabin. It's like, let me do a trade. And he killed it. And he made like $700. He's 7 years old. And he took his half the money and he bought a boatload of apps. So I don't know if this is good or bad, but yeah, I've got to figure out something. Yeah, no, Nick, I appreciate it. I mean, and honestly, that's my goal. I mean, I've got my worldview. I was a history major, and look, I think like the life is great. There's whatever country you live in. I mean, I've traveled a lot, and to me, everybody's the same all over. All the headlines are BS. I've never been to Iran, but I've had friends who've gone to Iran. They've had a great time. If you look at the news, like an American isn't supposed to go there, right? I've also it was funny, we had a mentorship, and somebody from Israel who had never been to America came, and we're sitting there, and we're doing it's like a one-on-one, or 5 people, and we're all mentoring together, and it started to get dark, and he started freaking out. And I was like, what's wrong? He's like, I've got to get back to my hotel. When it gets dark out, the gangs come out. I'm like, what are you talking about? Well, of course, if you're overseas and you're watching CNN, it's about all the murders going on in the U.S. And it's like, well, look, yeah, it's okay. There's some bad pockets here and there, but I don't mind walking out at night. It's like so it's just kind of fascinating that way. But ultimately, it's like, look, it's about freedom, and freedom is just kind of being able to do like what you want without anybody trying to force their will on you. And trading represents that. So I'm very passionate about it. Why did they name it Tasty Works? I don't know. You know, it's Tom's a very creative guy. I've taken many of your classes that have more than covered the cost of the days in the classes. Today I had several squeeze trades and pulled out $21,000 on a 140 grand account. That's awesome. I love that kind of stuff. And the main thing to do, and I really encourage people to do, is after you've had a nice trade like that, stop. Like take the day off, get your head clear, because it's actually just as important to clear your head after a good winning trade as after a losing trade. All right. Why is TOS not available for UK residents? That is a great question. So a big part of that is because they were bought by TD Ameritrade, which is owned in part by TD Bank. And once a bank's involved, then all these country regulations get kind of crazy. So that's it's an unfortunate. And I don't know, for those of you that live in England, can you open up an account with like a demo account and at least have indicators on there? Like, I don't even know. But that's. I do know they have trades that you can do TradeStation there, I believe, and you can do the indicators through TradeStation and stuff like that too. Yeah, will this work on ETFs like the Qs? Absolutely, yes. I find a little bit more bang for the buck on individual stocks, but yes, you can do it on the Qs. All right. Yeah, Brazos, position sizing is the most important thing. And that's something, and it's been hard for me to quantify it, but I'm going to be spending time on that. The idea, the larger the position, the shorter, I mean, this is the way I look at a position. It's kind of like an hourglass clock like this, okay? So, say you start off, you start off at, max size, whatever that is for you. What's going to happen is there's going to be some multiple targets. So there might be like, target 1, target 2, target 3. You want target 1 to be like a no-brainer, like very, very attainable, okay? And when you get there, you're reducing max size to half. So you're that's not what I call feeding the ducks, okay? And that's actually a big part of that. Not holding on to max size for, a lower probability target. And then if we can get that second target, cool, then I'll get down to a quarter. But a big part of my trading is when I get a max size is I've got a small target on that initial half, okay, a very achievable target. Sometimes I miss out on a lot of money because, like Nvidia is a great example. I got my $6 and got out, and since then it's gone up another like $12, an additional $12. So, but that's just how I've learned. Again, my whole goal is the consistency part, right? All right. All right, guys. Well, let me see. I make sure I got all the questions here. Yeah, Boris, I do text out all the trades. The only ones I wouldn't do is like sometimes there might be an earnings trade like right at the close. But those are a little more unique, and they don't make up a large part of my trades. All right. What time of day will the classes be? So from the strategy class will be at noon on that Saturday, the 17th. And then the regular part, it will be market hours. So, so I'm in Central Time, so that's like 8:30 to 3, and then we'll spend, some time obviously afterwards. But generally it's, start like at 8:20 and like at 3:30 Central. So they're pretty intense days. We take an hour for lunch, give or take. Sometimes we'll stay longer after the close and wrap up. Yeah, John, absolutely. So what I do is like a lot of my tools right now, I still use on my TOS account, even though I'll be executing trades on Tastyworks. At some point, when we get those available for Tastyworks, then I can move them over there. Yeah, AMD, exactly. Oh, okay, good question. Will the stats tool work on commodities, futures, options? So that's a great question. So, and I like trading commodities, futures, options. I don't do a lot of them. I do mostly equity options, but like this is a call credit spread in the euro futures. So if you come over here, and again, what it's going to do, and you can obviously do EUR USD, is it's going to look and go back and look at the actuals. And you'll see here, so in this case, it looks like the downside's actually a little bit bigger. I mean, you can measure it, but so the short answer is yes. So, you can see, notes, if you're going to be doing something on notes, you can see that, look at this, the upside is actually pretty narrow versus the downside, right? So that's actually pretty powerful information just based on the actual prices. Does John text out his trades for the gold membership? Yes, I do. Bu, 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 bu. What do you guys do in Canada? Is there a version of TOS that's available in Canada? It's a slightly different version though, right? Can I get help setting up TOS to use the indicators? Yeah, so if you do want to set up a TOS account, again, I'd encourage you go through our link here. It's free. It's obviously you just fund your account. And then we'll send you tutorials as well that show you how to set up the indicators and all that kind of fun stuff. Yeah, so for the Saturday class, you're going to be stuck with me. It's just going to be me teaching. I will have Eric, who created the indicators, come on for like 30 minutes or so to really dive into the indicator and the guts of it, just to make sure you guys fully understand it. But the Saturday class um, will be me doing that. During the live class, I'll probably have Henry and Bruce help me out on a few things. Bruce is really good at setting up spreads, so I have him come on for like an hour and talk about that. Henry's got some cool things that he does, and he's also very, very good on the Tastyworks platform and things like that. Yeah, Bob, it's a pretty cool thing. So the class on the 17th, I believe, is scheduled to go. It'll be like from like 12 to 5. So it's like a hard start time. We have again, for if you're a newer trader, okay, you will get homework that you can review and say, oh, that's okay. Now I understand how the markets work, right? And it would be very, very good if you buy this now so you can start reviewing that homework. So if you're a brand spanking new trader, that way you're not going to walk into this feeling overwhelmed. On the other hand, if you've done some classes with me, if you're familiar, you're good. We'll send you some homework. You can look at it or not. But I just want to, have you be, rest assured that if you're newer, you'll be fine. Just do your homework, though. Por favor. All right, guys. Well, it is, yes, RUT, SPX, absolutely. So we've been going like an hour and a half, hour and 45 minutes. And yeah, and by the way, and so what'll happen too is that if you are following a trader, like if you just want to do my trades, it'll say like JC. And some of you, and look, Henry does some trades that are sometimes like way smarter than the ones I do. Like if there's trades where like I'm like, oh my God, this one's kicking my teeth in, then the butterfly that Henry traded up is fine, right? And so what'll happen is, is you get used to different people's styles and you can mix and match. Some people just like, okay, I just want to do what John's doing. Awesome, great. Some people are like, okay, I want to do a mix of John and Henry, or I want to do a mix of John and Henry, whatever it is, you'll find it. But the key is once you understand the why, once you understand the strategy behind it, then you'll at least know like, oh, okay, now I know why they're doing that. And yes, I want to do that myself too. Oh, thank you. So there is, so for if you want to do toss in Canada, you just got to go to TD Ameritrade in Canada. And that'll have it. It's, I think it's, but I thought it's a little different, but it's the same thing. Yeah, we need to get a live, right? All right, guys. So, again, let me just jot this on here. I'm going to sign off. So this is the class. All right. And this is going to be my new Tastyworks account if you want to follow along. Again, I totally encourage you to use that link so you get credit, and that'll help you in the future. And then if you like have Fidelity or Schwab or something like that, and you're thinking like, well, these indicators look really cool, I would encourage you to open up a Thinkorswim account. So I use both. That's if you want to, open a TOS account, open a Think or Swim account. And again, if you use the links, what happens, so, you get, like on TOS, you get discounted commissions, which is great if you use our link. If on Tastyworks, you're going to get credit for the indicators when we transfer them over. So there's a lot of upside in using our links for that. All right, guys. Boris. So yeah, it's being built by the same guys. So they're I am more used to Thinkorswim at this moment. So I'm in the process of getting up to speed on Tastyworks. But from what I've seen, the answer is it's pretty close, and they're improving it every week. Yeah, and I will say that the account opening process for Tastyworks was the most painless experience I've ever had opening an account. Oh, you did open up your Roth there. Okay, awesome. So so they have that going. All right, guys, fantastic. I'm going to leave this up for a little bit. You guys have a great night. For those of you that are in the room, I will be in the morning, I think at 9:30 Central, and we'll see what happens with Alibaba and Tesla tomorrow. You guys have a fantastic night. Thanks for joining us. And then for those of you that will be joining us Saturday the 17th, I'm very much looking forward to working with you, and have a good night.